Alright, what's up YouTube? There it is. So, 15-minute chart. We have a nice little drop from yesterday's 56.80, 56.70. We had a weird, massive green candle there right at, 1800 Eastern Time. Looks like some sort of tweet about Asia-China trade. But we've probably given it all back, so we continue to top wick into that 56.70 zone. 56.70 yesterday was the target to hit, which was the settlement open from last night. And then right when I signed off the stream, we tapped it on a tweet and then dumped all the way back over and continue to dump all the way back over. So they're still selling into supply here. Check out open interest on 5.9 SPX options. Yeah, there is a whole bunch of puts coming on the books that every day there's a large quantity of SPX puts hitting the tape. So not something that we need to ignore. So in my back testing and looking at all my Excel sheet for my trades, my biggest trades by a factor of like 10 are macro pivots. So I'm sitting there thinking, why am I sitting here wasting time every day scalping back and forth? Although I do pretty well most of the time. Why am I doing all that when all I have to do is wait? Like if you look at all the dudes on Twitter, even the Trader Kane guy, the guy that took the $3 million payout, like all these dudes on Twitter, even Lance, all they're doing is waiting. Tory trades, y'all talk about Tory trades. You know, she took what? Like that one time she took like 7 trades in a year or something like that. So why am I even wasting my time here? Just so I could stream, you know, just so we can run the community? That's really the reason why. I don't like scalping. I do okay at it. I make enough money, but by far and large, my profits are made on the big macro levels. So why not just wait for those big levels and that's it? You know, why not like Taylor will stream when the market is approaching a big macro pivot, a big fluctuation, and we could start monitoring different names, expand outside of the S&P. We can go to oil, we can go to platinum, we can go to gold, all these different names. We can go to Tesla, which I've been looking at taking more trades on, and just wait for those big macro pivots. Take the trade, and 9 times out of 10, it's going to work out. So that's the fun stuff to me, waiting for those big macro pivots. That's my system, and that's where all my profits come from. My big trades for the year happen at those big macro pivots. That's why I made all the money when I was skiing in Vail, because we hit that big level. I think it was like 5,200 or something like that, and we rocketed 100 points off of it. So that's kind of in line with what the changes are going to be coming this summer. What do you do for a living? I'm a waiter, 100%, 100%. Like in soccer, you get the ball, you shoot on target, you freaking miss. Yeah. So the real thing that's going to be changing is how we do streams. That's it. We're not going to be sitting here anymore hours on end, just looking for scalping positions back and forth. And on the other side, it'll be more value. I'll be calling all my plays instead of, you know, just teaching, because it'll be the more stuff that y'all can actually take advantage of. Will be banana season coming back, baby. That's right. I don't know how much about her, but I saw her 24 recap, and she did 14 trades the whole year, made 200K, 100%. And I could guarantee that y'all will be profitable doing that stuff, because it reduces trading into its simplest form. It's like simmering everything down when you're making, you know, a gravy. I put all my tomatoes in a pot, I simmer them down for 8 hours, and it gives me that nice, juicy, high taste, very concentrated tomato sauce. It's fantastic. Same thing. So just reduce it down to your high quality trades, and it's literally as simple as waiting for a macro pivot. Now, the hard part, it sounds good on practice, which I'm very good at. Patience for me is one of my strong points, but if that's something you want to be a part of, can you wait through big aggressive moves for a large imbalance to hit at a macro level? If you can do that, then you can be successful. Because that's all it is. You'll hear the terminology around you'll hear the fancy terminology around Twitter, around YouTube, around all these dudes that are posting trades about, you know, I've got my model quote unquote. It's a fancy term for strategy. They use all these fancy technical terms to try to sound smart. Imbalance, fair value gaps. It's all a bunch of crap. It's all a bunch of crap. Just buy a macro pivot where there is a imbalance created, and that's it. That's all you need. And we'll show you how to do that stuff, like I do every day. The only downside is that I have to think about how do I present that in a way that's marketable, because here we stream every day. But if we're not going to be doing all that daily scalping on the streams, how do I do that? That's my thing I have to figure out. What's up, Joni? Just joined new to trading. Welcome. Bienvenidos. Konnichiwa. What do you mean by macro pivots, and how can you tell when we pivoted? Well, longer time frame analysis. 60-minute, 4-hour, daily chart. You have to look at longer time frames, and you balance between volume, historical price action, and volume profile. In a few years, I will say I'm a year clean off scalping, 100%. VPA walkthrough again. I coach for a living, and the power of repetition cannot be overstated. 100%. 100%. I'm working with my kids right now on developing a better swing, a more powerful swing, and getting out of like the younger little league type swings where you just let them hit as hard as you can. And it's all about repetition. 100%. 100%. How do we identify imbalance? That's a great question. That's where I get confused. So imbalances are created when the market moves from consolidation into trend. Applied across any time frame that you wish, 5-minute, an hourly, 4-hour, daily. Whenever we have a period of consolidation, we break out of that range and go aggressively to one direction, there is an imbalance created. The market cannot trend in a balanced market. So by definition with the order flow, there has to be an imbalance created in the order flow, a skew, might have you. So predominantly buyers, predominantly sellers, and that is where it creates a suction at that particular level. So in this case, something like 5454 down here. So we have a period of consolidation, huge breakdown, immediate bounce, and come back up. There's an imbalance created. So right off the bat, I'm putting a level right there at 5455, and that is going to be my main target. And I could pretty much guarantee you with 90% certainty that we are going to bounce off that at least once. Now, I can't guarantee how far we're going to bounce up. It might be 5 points. It might be 20 points. It might be 200 points. I don't know. But I will guarantee you we are going to defend that level at least once. And that is what you need to exploit as a waiting trader. Can you be patient enough for the 54.55? Can you be patient enough for yesterday's morning's trade, which is a huge failure on my part looking back? I should have been all over that trade because I'm so focused on scalping the intradays here, trying to be fancy on streams, that I'm missing my high-quality trades. Yesterday should have been like shooting fish in a barrel. Why is it fish that get the bad rap? You pretty much put any animal in a barrel, it's going to be easy to shoot. Why fish? I don't know. Snakes in a barrel. Snakes on a plane. So anyway, I've had kind of like a midlife trading crisis recently on running the server. We're 4 years doing this now? Or just shoot the ball hoping something hits. Yeah. Have we had any macro pivots lately? Yes, we have. Yes, we have. Yesterday we had a couple. What we consider macro. What I consider macro is anything I can track on the higher level charts, 4-hour and above. If you can't track it on the 4-hour and above, it's not a macro pivot. Now, what does that mean? Here, let me show this here. Uno momento, por favor. Share your screen. Change screen. Top monitor. Here we go. We'll do it all together. We'll do it live. So let's go to the 4-hour chart. Anything that's not obvious on this 4-hour chart is not a macro pivot. So Like these little top wicks, not necessarily a macro pivot, like this minor stuff here. However, any of these big macro pivots here are stuff that you need to be aware of. Anywhere the market makes an obvious turn in the other direction is where you need to be aware of. Because why? Remember, we get caught in this honey trap of being entranced by the red and green candles. Everyone in trading talks about candles because that's an easy visual way. It's very difficult to teach visually the order book without candles. So we all sit here and we get entranced by the red and green candles, but you forget. It makes you forget what is actually happening behind the scenes. What is causing the red and green candles? It's buys and sells. So when I see an obvious pivot in the market, like let's say this one, this is a huge market pivot at 58.36. That tells me there's a very, 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 very large order block of sellers right about in this area. You don't have to be incredibly accurate with that. It's fun to be accurate, but you don't need to be. So that tells me that we have an incredibly large amount of supply sitting at 58.37. So when we come up and re-attack that imbalance, I can guarantee you with 90% certainty we are going to reject somewhere in this green box at least once. And that is your job to exploit that area. And that's the whole concept of my conversation this morning. Is that can you just wait for 58.40? Can you not FOMO the last 1 or 2% of market growth, of chasing the upside, to just wait for the short at that pivot for one good short off of that, or play both of them, whichever. And you can apply this theory across all different times. This is the essence of VPA trading: waiting for supply, waiting for demand, and exploiting those imbalances. Period. That's all. That's my two-liner for summarizing my entire strategy. And that's what you need to consider. And it's shockingly accurate, and it reduces trading to its simplest form if you can just wait for that. Now, if you don't do a good job at waiting for this on, let's say, just ES, because sometimes it could take days or maybe even a week for you to take a trade, then cool, that's fine. Then find you 5, 6, even 10 names that you track and do this across 5 or 10 names. That way, you have more chances of high probability setups. And you could exploit that. You could do less, you could do more. That's why you make your coffee, you sit down your chart, you do all your analysis, and you say, all right, well, I have nothing today, so guess what? I have a day off. The market just gave me a day off. I'm going to go play frisbee golf or bocce ball or whatever you do. And then some days you'll have 5 names hitting a macro pivot. You're like, holy crap, I have a busy day today. I need to manage and place 5 trades. And that is the way you need to tailor your trading setup. That is how you become a profitable trader. And I apologize for turning the server into a scalping session every single day. That is my fault. And I'll take responsibility for that, because that's the sexy stuff. That's the sexy stuff people want to see. But we are going to change. We're going to get away from that. Now, the difficult part about that is that prop firms aren't really conducive to this style of trading unless that pivot happens during the day and makes the move during the day. Then cool, you could jump in with prop firms. Consolidation is a potential energy waiting for force to push it one way or another. Exactly. Potential into kinetic, kinetic into potential, which is just a fancy science explanation for markup goes into distribution, distribution goes into markdown, and the process repeats over and over again. Wyckoff theory. Just as an example, can you explain again what made you say 58.36? Yeah, so let's take a look at the stream. So here we go. We have a major markdown event that occurred February, end of February. And we went from 61, 6,200 all the way down to 55. So we're talking about 600 points in the S&P, which is very large. It's nearly 10%. A little less than 10%. We bounce, we come back up, and then we smoke it. Now, what's going on here in the emotions of the market, the emotions of traders in this range right here? This big green move from 55 to 58. Holy crap, the market's going to go back up. I'm missing the move. I hate myself. I should have bought. Blah, 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 blah. And then immediately, when the market begins to buy on this crazy rally right here, it dumps. And it continues to dump another 15%. So you bring in emotions here of trapped buyers. So you have a whole crap ton of people that are trapped 58.30. They're either still holding or they closed out. Either way, there's a lot of liquidity here to 58.36, a crap ton. Crap ton. You're going to have people taking profits on the long side. You're going to have people closing out, thanking their whatever God they choose to believe in that they're finally back to break even, and they're going to close out left and right because they're very weak-handed positions right now. And the market's going to roll from 58.30. Now, I don't know how far. It could be 10 points. It could be 100. It could be all the way back down for a double top position. I don't know that. And I'm not even going to try to guess that. But all I'm saying is that on these pivots, you have to be aware of what's happening here. Zooming out on the 4-hour every single day will help you identify these trades. What we got going on here? Red candle range to range. Let's see. It appears Vance is speaking right now. There's no conversation between the U.S. and China about a strategic deal on Taiwan. Uh-oh. That's the first comments I've seen on Taiwan in a while. Interesting. I appreciate you saying that. I found myself being frustrated with some of the mornings lately, and I think you addressed most of my concerns. I think you're adjusting the server to make things better for a move forward. 100%. And it's gonna there is a selfish reason for that because I'm bored. I'm bored with sitting here doing this scalping, this style of stream every day. Maybe I'm the person that can that always needs to change, like Tiger Woods. You ever read that book, The Big Miss, with Tiger Woods that Hank Haney wrote about Tiger? One of Tiger's downfalls was that no matter how good he was always bored. He always had to change things, no matter how good he was. I'm not saying I'm Tiger Woods. I'm not about making that comparison. I'm just saying, I don't know. Maybe I just get bored easily. So I think it's very easy to see in hindsight once the chart's already printed. I look forward to seeing the strat live. Well, you're 100% right. And that's where all the other system comes in. The emotional side of things being in control, the risk mitigation, because, it's not as simple as just buying a dip, buying the bottom and holding. You have to have risk mitigation. You've got to be able to wait for liquidity sweeps and all that stuff. So it's not as simple as just, playing those levels. Otherwise, everybody would be rich. But there's a lot of everything from here and there. It can be that simple, but simple doesn't mean easy. Simple and easy aren't the same thing. Thanks for the advice, Tiger. Follow-up question: since I'm not used to trading on a longer time frame, when you have entered that 58.36 position. Well, hopefully, if the markets do go bullish to 58.36, which heck, it could be today with FOMC, who knows? That's something that you need to plan for. So most likely, I would like to enter on the longer time frame, 15-minute at the bare minimum, and then go up to the 240 or daily chart. Definitely, Kyle. Yeah, 100%. 100%. Oh, what was the time? Negative. Anyway. Let's see here. For sure, man. For sure. So right now, for example, look at the 4-hour chart. There's nothing to really be had. There was that one trade yesterday morning we should have caught from the pivot on May 1st. But since April 30th, now we're going on 7-8 days, we've been dead flat. Coming up, coming down. We hit the 58, 57 here, and that's it. So in my opinion, this is where you could expand your horizon. How about we do some analysis on CL, on platinum, on gold, on silver, on all the others' names to see if there's any macro pivots. Now, gold's a hard one because gold's been straight up for however many months, years now. So it's difficult to find those macro pivots on a name like that. So you have to go searching. And then we could expand outside of futures and go into individual names. So 54.63, this or whatever this level is, what is that? 54.57 needs to be on everybody's radar because that's a massive imbalance. That's a massive imbalance. And to the upside here, 57.70 right here, and then of course this 58.36. Now again, kind of what the dude on YouTube said, easier said than done, right? Those are obvious targets, and yes, they are. So this is that when we get to those levels, that's about the probability fluctuation. So all that's telling us is that there's a probability increase of a counter move. That doesn't necessarily mean we blindly short these macro levels. Then we have to do this stuff that we teach here every day. The confirmations, the sweeps, set your entries where you would most likely set your stop loss, your liquidity loss, and then hands off. Can it close the imbalance? Once it does that, with a top wick, then you short off those levels. You don't just blindly short into those levels. That's the hard stuff. The easy stuff is identifying the levels. The hard stuff is executing them properly off of them. What's up, Bandit? How you doing? Thank you. Can you repeat those levels? 100%. So 57.25 will be a micro. And then you have a little bit bigger stuff for 57.70 and 58.35. Why? Because everyone is looking for the S&P to close the imbalance from Liberation Day at 57.70. The Nasdaq's already done it. ES is not. And then after that is 58.36. These are major liquidity pivots in the market that is not going to be easy just to blow on through. And if it does, it's going to cause a FOMO event. So what could happen, and likely what will happen, mark me on it, is that when we finally do climb to 58.36, we'll have a candle like this that blows. That's where you instead, the concept of you don't set your short at this area. You set. Oh, y'all lost me. Y'all hear me on the stream? Ah, crap. That was good quality stuff too. See, how am I supposed to create content when they kill me? Do I sound like Simon the Chipmunk now? And then we're gonna look at 58.36, and then go right. Wait, back. Oh my gosh. Something about a top wick. Oh man. I had a pitching contest with my son yesterday, and I might have smoked my shoulder a little bit. It's alright. I still whooped his butt. It's been 25 years since I pitched, and he still couldn't beat me. Anyway. I'm one of those dads that never lets their kid wins at anything. They're going to have to earn it if they want to beat me. Anyway, so most likely what's going to happen here is everyone's going to look to short this level. That's just market. The emotional way the market works is that everyone's going to see this level. You're going to see it on Twitter. Here's Liberation Day, 58.36. Everyone's going to be watching it. So they're going to smoke that level, and then they're going to top wick the crap out of it. And that's where you want to set your entry. You don't want to necessarily set your short entry right here. You want to set it above, because they're going to smoke it and then top wick it. They're going to stop everybody out that's trying to short it, and then they're going to top wick it. So you want to set your short entry higher. "25 years since you pitched a gabagoo." That's right. You play AAA baseball? Nice. I did not. I played high school baseball. Very cool. Played catcher and first base. Nice. Very cool. What made you stop? Did you ever get close to getting called up? Played T-ball. Injury, and yes. Nice. Look at you, man. Very cool. We got close to an MLB player in here. Nice. I love it. I'd love to hear more about that story, dude. I love baseball. When I played, when I played some travel softball when I was in college. It sounds a lot more fancier than it is. A bunch of dudes getting drunk and just hitting balls. But one of the dudes was a prior double A player, and I'd never been around anyone who was actually in the double A or system or single A or triple A system. And even him, the double A, even the double A player, they are so leaps and bounds beyond the average high school college baseball player. It's insane. Like we were in the outfield shagging balls, and he picked up his bat and he would hit like light poles with the ball. He would hit it, just toss up the ball, hit the ball, and he would hit a light pole just out on demand. It was just crazy good, crazy good. How accurate he was with it with that. Anyway, I'm sure you are too if you were playing AAA. Hey, it's a new GIF. Oh my gosh, you can check these balls. Oh my gosh. Can you repeat that? That was important. Which part? R Diesel. Which part? There's a guy who's the worst player in the NBA for like 10 years, Brian Scalabrine. He loves to say, I'm closer to LeBron than you are to me. That's 100% accurate. 100% accurate. What is it? I miss something of the Kermit voice. She laughs. She's a nurse. She's a lifetime nurse, so they have a equally as dark and perverted humor that I do. So she loves my sense of humor for the most part. At least I like to think she does. She is. She is a keeper. A few courtesy laughs, yeah. All right. Remind me what the settlement open is. All right. Settlement open is the open from the prior session, which opens it, what is that, 1800 Eastern Time. So if you look on the chart, let's go to the 5. Close all this crap. So if you look on the chart, right here, there it is. That's the settlement open. Right at the green, right at the open last night, we had a big green. Also Globex. There you go. So global exchange. If you set your levels at the Globex low, the open low, or the open high, intertwined with the other big levels, you can make those kind of semi-macros. Now, this whole theory behind waiting for the macro pivots, you can apply that to the 15-minute chart. So that's why I track the overnight low, the overnight high, the prior day low, the prior day high, because if you can exploit those levels, it's the same exact concept as the longer time frame stuff we were just talking about. It's just you have to be a little tighter with your stops, and you have to expect less, because shenanigans happen on the lower time frames. You can have the best setup in the world, and it instantly breaks down on the lower time frame chart, because you have a lot more variables on the lower time frame chart. The lower time frame chart, you're dealing with sweeps, you're dealing with zero DTE option chain positioning, you're dealing with high frequency traders and algorithms. So a lot of weird stuff can happen. You're dealing with intraday news, you're dealing with tweets, you're dealing with a whole minefield of variables on the smaller time frame. That's why smaller time frame trading is so inherently unpredictable. Whereas the longer time frame stuff, you're not necessarily dealing with all that crap. You're just dealing with pure price action order flow for the most part. R Diesel, did you get your question answered? So, yeah, anyway. So what I would do in this area is I would set, especially going at it, what the crap was that? A bird just hit the freaking window. Let's get out of here. The kamikaze bird out there, man. You alright? Did you hurt something? Nah, he's alright. He's just kind of he's just sitting there just like looking at me. He's like thinking stuff out. He's like thinking about his life choices. The Gov Senate, yeah. There's probably like an unmarked van down the road with a bird drone. It's like, oh, you flew it too hard. Pull it back. Pull it back. Dang it, Steve. We worked on this. Anyway, sorry. Get a little crazy. All right, so let's look right here. We have this little pivot at 750. Right there. Micro pivot. So you can't expect much there. You can't expect as big of a rejection there as you would at something like this one at 56.90. It is an imbalance. It will reject off of it, as it is doing now, but how far? So on smaller pivots like this, you have to expect way less than a bigger pivot. These pivots up here at 56.90, you can expect a larger rejection than something like this. Right here, we're getting a small rejection. It could turn into a full sweep back down, but we don't know. So this is just a small pivot off of it. And we're already getting a nice pivot. So expect less from smaller pivots and expand your expectations on larger pivots. Like right here at 56 to 52. The more obvious the pivot, the cleaner the price action is. On the longer time frame, and the more aggressive you can be. After that, it's all about monitoring your stops and liquidity. A lot of traders are all about the orb opening range breakout lately, which seems very similar to your morning range. However, some market on the 15. Yeah, I've noticed that, and it's because a couple of the high-level traders started tweeting about that, so now everyone's picking up about it. Like, there's like 5,000 people on that dude's stream, so whatever he says becomes kind of like the hot button items on Twitter. He has a lot of power. I hope he understands that. He has a lot of power on what he says. But yeah, that is 100% accurate. I would mark it on the 15 hour, 30 minute, and hour. Is he legit? He makes a killer. I mean, he makes a killer amount of money. I don't know if I've never watched any of his content to know what his actually trading strategy is, but he makes more money than I do on prop firm pullouts, on payouts. So, Patrick Whalen. That's all I can say. I don't know how. I mean, I know he's resetting a lot. I know that he has posted. He resets a lot, but I guess if that's what you're doing, but. His attitude's not for me. Yeah, he's a little boisterous. He sounds like a jabroni, not the good kind. Yeah. I circle back to the orb strategy to stop me from jumping into trades so early in the season. Orb is a great way for the last few months, as I've mentioned more often lately. Yeah. How can you get better at not closing a position too early? Any advice? Yeah, Camilo. So, all right. Let's take this. We have a pivot in the overnight low. Well, not overnight low. A pivot. Let's just call it a pivot because the overnight low is super low. But we had this pivot right before the market opened. right here. Let's set up an example for you. I don't know what you trade, but you took a trade, but here. So we have a first move off of here. So we have a doji, we have a couple of bottom wicks, actionable long possibly, comes back up, smokes it all the way back over. The double top bounce, or the double bottom, which is a typical retracement for the order book to come back down, bounce it, and go back higher. This is very common for a double bounce. It comes up, comes down, boom. So let's say you take an entry, I don't know, here, whatever. Let's say you get a great entry, and you take an entry here. At that point, the hardest part of the trade is done, getting into a proper high-quality setup. After that, it's management. How do I maintain the position to give me a proper R&R, where I'm just not scalping for 5 points? It's about managing your stops. You have to put on a stop to some degree. It can be a trailing stop, it could be a hard stop, it could be a profit target, whatever it is, you got to put on something. So your job is to figure out how to put on a stop. Now, obviously, this thing went green. It would have been nice. It would have worked out well. But you don't know that in advance. So you've got to be able to manage your stop in a way that's going to keep you consistently profitable. So what I do is I set a stop based on the question of what price action do I need to see where I no longer want to be long. And that is, if this thing comes back down and fails a third time and breaks the prior low, I absolutely do not want to be long no matter what. So I would set my stop somewhere about there. Let me make this red. Somewhere down in this area below. And let this thing do its thing. Chop back around, bottom wick, and head higher. And that way, when it starts to climb higher and go higher, once it starts taking out prior pivots like 56.41, 56.45, then I want to move my trailing stop up and lock in profit. Because once it accepts a prior high level, you do not want to let it accept a lower price because that's a full-on rejection. So once this price action starts to climb and accepts a higher price of 56.45, 56.47, then I want to move my stop up because you no longer want it to pull back. That's a bad thing. And then every time it takes out a prior high, like right now we're absorbing 56.52. So if I'm still long, I want to move my stop up again. Because once it accepts 56.52, you do not want it to come back off. Accepting a higher price and then rejecting and coming back down to lows is a change of character to the downside. You don't want to be long then. After that, it's just hopium. And that's what I do. Every time we accept a higher price, I jump my stop up. And that allows me to lock in profit and continue to ride the trend. Now, you can't set your stop too tight. If you set your stop too tight, you're going to cut your legs out from it. You're never going to be able to catch a big trend. You're always going to be stopped out. You've got to be willing to give back some profit to allow the trade to breathe and go further profitable. It's a risk. It's a trade-off. You're risking some profit to gain more profit. That's just the way trading is. It's always a trade-off, risk-reward. And if you could do this consistently, you're going to get stopped out 80% of the time, most likely, sooner than you want to be. But that 20% of the time, you will catch a very, very large trend one time a quarter, maybe once every 6 months, but that's all you need. That's all you need. You'll catch hundreds of point moves on NASDAQ or ENS once every 6 months, and that's all you need because you'll make a bunch of money. But there's a lot tied up in that conversation that the average trader may not understand. It's understanding the order book of accepting higher or lower prices. If you're looking for a trend up, you want the order book to accept a higher price. And that trend will continue until you start putting in a lower low. When the market rounds over and start accepting lower prices on longer time frames like the 15 or 60 minute, that's a change of character in the market, and that shows you that we have too many sellers than buyers. If you go back and look at a major trend day that never pulls back or never bounces, like a downward trending day, when's the last time it happened? Let's look at, I don't know, let's go back and look at February 20, nah, that's too far. Let's look at this monster day on April 4th. Let's go look at April 4th. And we'll look at that example. Boom. So here's a move right here, from 5,300 to 5,155. That's a 150-point move in the S&P. We have the typical double rejection, So we have our first rejection, bounce back up, double rejects, comes back off. So here's your actionable entry right there. If once you entered, let's go to the 15-minute chart because that's what I would be holding that trade on. I don't know why it does that. Trading views drives me nuts sometimes. There we go. Here's a 15-minute chart. So once you enter, every chart, every candle cannot take out a prior high. So you want to maintain short as long as you don't maintain a prior high. Now this candle should stop you out because once this candle opens and goes all the way down, I would lock my stop in because when this happens and you take out the prior high, which in this case, come back up, once it takes out 52.19, that's where I want to get out of the trade. And that tells me there's a change of character. Now, yes, it would have still continued to go down, but can you survive a 130-point bounce? Most of the time, that answer is obviously no, not in this position. But even still, we have crap. Stupid trading view. Anyway, you get the point. Trading views all over the place. Like right now, we have bottom wick on the 15. Doji, we're absorbing the 56.50. So to me, there's still no actionable short until you could take out prior lows. Because it's doing this. Higher, 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 higher. Actionable trend. Once it starts taking out 56.47, you can short back down. That's this order flow understanding. You're welcome, Camilo. What do you mean by accepting a price? How to spot versus a failure? Accepting a higher price is closing over a price on whatever time frame you see fit. 5, 15, 60, doesn't matter. So for me, if I want to play long on the long-term macro scale, let's go to the 60-minute. If I want to play long up to 5,800, right here, I need to start seeing the market close hourly candles. Close them. The body of the candle has to close over these levels. Somewhere in this area. I need to start seeing upward momentum of accepting higher prices. Because what, again, going back to what we talked about this morning, what is at these levels? We have sell orders, big blocks of supply sitting at these levels. So if the buyers close over those, that means they've completely wiped out all of the supply there without wicking down, which tells us that there's now more buyers in the market. The momentum is beginning to build to the upside. So once we start closing over the micro pivots of 67, 72, 88, we'll start looking at the macro stuff like 70, 57, 25 and start playing long. And then conversely to the downside, if you want to start seeing sell action, we have to start closing below prior lows to show that we've wiped out all demand and the buyers aren't just going to bottom like the crap out of it and rocket ship back up. Because what I'm seeing here on the 60-minute right now is aggressive top wicks in this area. Aggressive top wicks. So I need to see the fact that the buyers are no longer going to get top wicked to start playing long to 58.50. Can you do that thesis on Nvidia? Yeah, let's go take a look at Nvidia. Let's go to my top SPY, Nvidia. Oh, man. So obviously, right off the bat, I see my favorite setup, SR flip. Prior resistance, new support. That tells me we have major liquidity, Buco liquidity here at 111. So on this scale, on the 1 hour chart, 111, which would have been a fantastic long on Tuesday, will not provide as much support as the first one, because this one, beautiful long, second support, third support, fourth support, fifth support, starts getting weaker and weaker. That looks more like absorption. So once we clear 111 and close 111 on the daily, hourly, whichever, that tells me we have more sellers, and we'll play down a value low, which is about 104 right here, which will be a great support to long off of temporarily. In fact, I would put an alert at the bottom of this chart, 104.08, and play long off of that. Scalp first, go longer for there, depending on the time frame, whichever you want. And to the upside, you have all of this stuff, all of this crap. Look at all this resistance right here. So that tells me in this little block of 115, 114 and a half, the buyers need to accept higher than that to break out. So what I would play here, if you want to go long on Nvidia, the way I would play this, let it breach bottom wick, long calls in this area once it starts to bottom wick off of it, and then play long to the next macro, which is the imbalance at 120.4. That's what I would do. Show that the buyers can accept supply, close it, accept higher prices, and then play to 120.4. Now, if you want to play 120.4, what I would do is I would take a strike on a call about 118. That allows you to go to the money, get that nice high gamma spike because gamma's highest at the money. Let it close 118 and play 120. Now you get intrinsic value. So you get delta appreciation, you get gamma explosion, and now you have intrinsic value to lock in a lower theta quantity at 120. So I would probably play 2.5 week to 3 week dated call at a 118 strike on Nvidia. Once it closes at 114.5. So you know how I plan to exit my admin job for clinics next month to do my family business full time. A-firm. Well, big boss who trained me is retiring and offering me his national position if I stay, which is a triple promotion to manage managers who manage a manager who manage. That's a lot of management. For a hefty salary boost and definitely more responsibility. Business had exceeded my currently month's salary and net profits for the last year, but not exceeded my salary for this new position. What do you think? Being that I'm a religious man, I look at things a little differently and I'm trying to discern if this is a distraction or an opportunity. Would like your opinion. Since you think I'm ultra wise, I need to screenshot that. Thank you. Of course, pray about it. That's the first thing I would do. Don't make a quick decision. Let it marinate for days, maybe a week, or talk with your wife about it. But that depends. What is it going to do to your family life? Is it going to cause you to work 80 hours a week? Is it going to cause you to travel? Is it going to cause you to sit in traffic for an hour a day? If somebody would offer me a $350,000 job, having to drive an hour and a half in traffic downtown, I would turn it down. There's no way because it's not worth it to me. I hate traffic. I'd rather, never mind. Yeah, but that's up to you, man. It depends on what your quality of life is now. How is it going to? It's most likely there's going to be a trade-off. It is going to affect your quality of life to some degree. But is the cost worth that quality of life? That's my advice. I'm older. Back, if I was 20, there wouldn't be a question. I'd take it. But now I value my time with my family. I value not sitting in my truck in traffic. But congratulations on the opportunity. Then get taxed at 50%. I love it. I love it. It's only 30% here, Dan. We're not in Canada. Over. Yeah. Dallas is so bad. Stop moving here. We're full. Yeah. It's terrible where we are. It's absolutely terrible. The good thing is that people on the Facebook page are starting to revolt. They're starting to get fed up with apartment complex, or new $5 million home in the middle of a slum because some dude from California just slowed down a bunch of cash. Did I tell you what happened? Europe's all apartments and condos life. Yeah. So we have a real estate business. Obviously, all cities do. And on the front of their building, they put a big fancy red sign up that said "Selling Homes" as an advertisement. Well, someone wrote "To Californians" underneath it. It's fantastic. It's fantastic. It made the local newspaper. Can you check macro levels on RTY? Absolutely. Let's go to the daily. A high quality watch list cannot be overstated, by the way. All right, RTY. Not something we look at too often, but we need to. Let's zoom in a little bit. Let me know if you can't see that. Right off the bat, SR flip right there. We had a double bounce off of it. Beautiful long opportunity. I see missed opportunities all over the place, which is one of the basis why we even have this conversation this morning anyway, because I'm missing too many freaking opportunities here for stupid low-quality setups. So 1977 is a pivotal level. It's not going to be as strong the third time as it was the second time. We obviously have this big pivot up here, 2035. Another SR flip. The big imbalance, 2092. If RTY, if small caps get up to 2092, then most likely the S&P will breach 5,900. If small caps come along like that, that is very positive market breadth. Which, by the way, if you want to identify a true market trend, RTY is your kicker. Because if small caps and emerging markets are going bullish, then that is true market breadth of the S&P. Because there's a lot of shenanigans, as we already know, in the S&P. You have the mega caps that do crazy stuff. It's not necessarily good. So if you see the small caps and emerging markets start to go green, then most likely we're on the heels of a good, decent trend. Matrix, what's up? So yeah. Any idea on how long you planning to play the Fed news? I don't. I don't. All right, y'all. I'm going to flip over to the bookmap stream in 3 minutes, so I do have to pause the stream and switch. I will post the links when they are active. Give me a second here. So I submitted another TS payout last night, but I'm realizing I might need to chill and just build more massive cushion before I hit the payout max and get moved to live. Yep, being moved to live sucks. Hate it. Not to mention it takes them 3 weeks to get your account freaking set up, which is aggravating. It's kind of like when you when there's a kicker getting ready to kick the game-winning field goal, and the other team calls timeout to ice him. Sucks. Anyway, I do have to cancel stream. I'll be back here in about 2 minutes.